Hello, welcome everyone. Thanks everyone for joining. David here, Day Trade Like a Pro. This is a follow-on training that we're doing on a number of the tools that we have. We did a training a couple weeks ago that went through all of our Pro Suite tools and really focused on how to use those tools in conjunction with each other and also individually. I'd say today's training is a follow-on from that. We'll be focusing on probably a few more advanced concepts. If you did miss the first training, I can send around a recording of that after this when we send around the recording of this one as well, so that you can all have that. Ephraim's going to be going through the training today. Like I said, it's a follow-up to the last training we did on our tools, and we probably will hit a couple more advanced things. So Ephraim, with that, I'm going to pass it over to you.
Okay, great. I think I recognize most of you who are here, so welcome. And if I don't know you, then welcome. Let's jump right into it. If you just have nothing to do at some point, you can certainly go read this. It's at members.daytradelikeapro.com/risk disclosure. You can go do that in your spare time and read that. Okay. I'm going to get right into it because I want to talk about, we have all these different tools in the Pro Suite. So I'm basically operating under the assumption at this point that you know what the Pro Suite is. It's really just all the tools that we've developed over the years, and we've bundled it together so that if you want to buy all of them, you can save a whole bunch of money and have access to all of the tools. And so I'm going to cover those individually, and I'm going to talk about a little bit more advanced strategies, and we're going to talk specifically about using it in your trading. We'll talk about actual entries and exits, things like that, how you can start to incorporate these. So I believe that you could use almost any of them as standalone if you have a basic understanding of how to read price action. So what we're looking at right now is we're looking at, this is key turns, and I want to do something that we haven't really done. So what you'll see in here in the settings for key turns, I'm going to start with this. Key turns was developed, initially it was these two different levels. I'm going to show you what that would look like right now. So it's these two levels. Basically, they're just a tick apart. We're looking right now, this is a 15-minute gold contract. On key turns, it doesn't matter what you are looking at. The time frame doesn't matter. You just have to have a year's worth of data loaded, but the time frame doesn't matter. In other words, key turns aren't going to be different if you're looking at a 5-minute or a 4-hour chart. It's going to be the same price. And it's basically a price where you could look at it really simple as a bias line. Above this, we want to be a buyer, and below it, we want to be a seller. Then there's more advanced things we can start to talk about, but I want to just, right now, I took everything else off the screen except for these initially developed as key turns. And I just want to show you what we're looking at when you can see this purple line here is where the Globex session starts. So we have the end of the day, new session starts, that's where key turns plot. And we're just going to look at it because I want to talk a little bit with you about how you use key turns to look at and gauge the strength in the markets. How weak is it? How much selling are we anticipating? Or how much strength do we anticipate? And so let's just talk about how it can help you understand some of the context of what's going on. If I go back and I'm looking at gold, and you can see I have this really kind of scrunched down so you don't see a whole lot of it. But what you see right here is we traded here. It's kind of holding, and then trade up to it. And then we do break out above it. And then we come back down over here on this day. And now we're trading below key turns. And I think this is relevant coming into here. So if you look at this, we're below key turns. So we're primarily, we want to be looking for sell opportunities. Now, here's what I'll tell you. The further you get away from the key turn level, the more likely that they'll want to be a retrace back into that level. But I just want you to see that the further you get away from it, see how far we get away down here? The further you get away, the more likely we're going to come back up to that level. We can primarily be selling below this, but at some point, it's going to want to make a retrace back into that key turn level. So we'll talk a little bit more about that. Right now, I want to talk about just using it for bias. Look how weak this is. Partly, I mean, opened up, the market opened up here. Let's kind of zoom in a bit. So the market opened up way down here, right here. Key turns is clear up here. This is like 15 points away, I think, something like that. So on gold. So what that's telling you, just initially, right out of the gate, what this is telling you is that the market would have to bounce all the way back up to here before it could even, and then look, we have key turns over here from yesterday. So basically it's saying we have to come all the way back up here and trade above this with strength before we could really start to be buyers. What happens? We're primarily looking for selling. There is a really big sell-off here. What is this sell-off? About 35 points, something like that. What happens over here? Never trading above this. So does it come back up? Yes, but never trading up above it, primarily looking for shorts. Then what happens? We trade and dip down below it. That's fine. Typically, I mean, look, sometimes it'll hold to the tick, but typically I like seeing a move like this. So we trade down below it. That's great. We come back up. We hold right there. And then can't really make a move out of here, but doesn't really break over here either. So just trading in a range right around key turns, and then eventually, if it can't really get up out of this area, it is going to drop. That's a pretty typical. We've been in a mostly down market. It's consolidating. That consolidation usually leads to a continuation. So look what happens. Okay, so here's the open for this day, and then here's key turns. Notice what happens. Little peak up above it. You're still wanting to sell here, and look at that nice rundown. Now things start to change over here. Comes back up, and it starts looking like it's holding. It's moving up away from here. Okay, not really able to get up out of this area. Okay, again, you can kind of see things as the days are going on. You can kind of start to put things together. You notice what's happening here? Okay, trying to hold up above here, but even this move down, and key turns moves down and says, okay, look, we can still get buyers coming in here. Let's just see if we can hold in this area. And so what happens? This area holds here. This is where it opens, trades through it, never looks back, comes back down. Now key turns moves up and says, okay, we want to hold this area. Look what we have. Really nice couple of probes through right here. In a sense, this is telling you the market's fairly strong because it's opening up all the way over here. And even if it came all the way back down to here, it's saying even all of that would still have you be on buy side primarily. Even that move down there, and like I said, the further away you get, the more likely it's going to want to retrace back to it. So it does come back and retest it. That's great. And then we get a nice move out of there. And that brings us currently to today, which was we couldn't even get down here to test this, but given how far away we were, not a big surprise they're trying to come back into this area. So price is only going to deviate so far from key turns. So that's a very kind of a high level look at how to use this main level that was originally developed. Now we wanted to add in some other opportunities, so we added these two other levels, which you can see they vary in how far apart they are, or sometimes on a day like this, for example, all three levels are stacked at the same area. But I just want to point out that you can treat all of these the same way that we were talking about just this one. So we want to be short below here. We want to be short below here. We could be a buyer above this one, but then if it breaks below it, we want to be a seller. And then look at what happens, comes back up. It moves away, comes back to retest key turns, and then holds below that the rest of the day. And then most of this trading happened inside of this key turn area. And then here we are again, not really able to get away, breaks down here. Only one level here. This basically moves up here, comes back and holds right here. So here's this, and then coming into today, couldn't quite get back to there. And we don't have levels for tomorrow yet. Those will populate in about 18 minutes, 17 minutes when the Globex session opens. We have had traders handle this a lot of different ways. But by the way, key turns works on stocks. It works on futures. It if you can put it on a chart, it will work. But I think I have Bitcoin. Let's just go see. But just to give you an idea, this is on Bitcoin. So over here it's telling you want to be a buyer as long as this is holding, and then we get a really nice pop up here. Want to be a buyer, that's holding, nice pop. I know that's really, probably small, but the point is not that you can see every candle, but you can see where the line is and what price does. This entire day basically trades in here, then breaks down. Sell below here, you could buy above here, and then that breaks. Want to be a seller below there. So it was really built to answer that question, should I be buying or selling? You can literally look at the chart and go, okay, today this is holding, and as long as this can hold, I want to be buying. And then there's that opportunity to be buying. You can see how it came off of these different areas and then eventually retraces back up to here. And one of the things that I'm going to show you today, I'm going to teach you something that I've literally never taught in a public setting. And I'm going to show you how to start combining some of these things together. But anyway, the real point of what I wanted to show you here was really that this works on, we can go to anything. This is some random day that I scrolled back to on Bitcoin. Here's a probe through this key turn area, moves up through here, comes back, holds key turns, and then takes off. And where does it retrace at the end of the day? Back to key turns. You come over here. This is saying sell. As long as this doesn't break out up above here, stay a seller, stay a seller. Look at this huge move down. This is from 21,715 all the way down to 18,400. I mean, this is a gigantic move. And this is telling you want to be a seller down here. This is still telling you want to be a seller. Then we gap way up here, right? So sell below here, buy above here, huge gap up into here. And then obviously this is telling us there's a lot of strength because we're way up above key turns. We've had this huge gap and we're way above key turns. So big move up. Again, this is a huge, if you were trading Bitcoin, that's like a $2,000 move from here to there. Then this holds, breaks down here. This ends up holding, moving down into here. Anyway, so you get the idea of that. I mean, we could literally do this on any chart all day long. So the idea with key turns was to be able to go, okay, do I want to be buying or do I want to be selling? And that was really the whole idea behind it, of just there was basically you had a bias, a line in the sand of where you could say above here, I'm primarily looking to be a buyer, and below here, I'm primarily looking to be a seller. And that you'd have something that would be reliable, which I think that key turns, and one of the things I love with this is you can literally go put it on a chart and go back and look at anything you want to look at and see how did it perform. And I can't tell you the number of times I've seen an email or something from traders who use this to say this uncanny, that oftentimes it'll have the very high or low of a move to the tick. And it does happen. It seems like frequently. So this works well on futures. It works on, you can see I have it up on Bitcoin, but I think it really performs the best on stocks. So if you trade options, or if you're a stock trader, or that's something that you kind of, that's something that you do, or maybe you dabble in it, or you want to get into that, this is really an interesting. We had a trader who used this. He ran a fund and he was using key turns as a position trader. So he was always long or always short, and he traded Apple, and he was always long or short Apple, just following what key turns said to do. That was it. I can't tell you what the returns were, but it was in the hundreds of %.
Ephraim, can you pull up Apple?
Yep.
Why don't you pull up Apple? And there was another question. Do you need 24 hours of data when you do the 365 days? And I think the answer is, and you can correct me if I'm wrong, but it's you want all of the pricing data. So you want RTH and the Globex data, but if it's stocks, you just take whenever the market's open.
Yep, that's right. Yep. I believe this only will work on a daily chart on Apple because I don't have stock data on here. So you can kind of start to get an idea. So if you're looking right here, you can see, if I just kind of zoom in and I just kind of pick out, here's the low of this move on Apple, and look how close we are right here. This is the low. Here's 123.13 and the key turns at 123.10, I think. So above here, you want to be buying. Yes, it probes through there, but if you go through here and we just look, you can see here's the low of the day, just probes through key turns. Here's the high right here, just probes through that. This one just probes through that. Here was today on Apple. primarily wanting to be a seller and nothing really going anywhere. Notice what happened 2 days ago here. Probes down here, big move up. It works really on anything. So if it works particularly well on stocks. So this is Tesla.
So you can't pull up a 5-minute chart or a
No, I only have end of day data for stocks. But this is Tesla. So 631.02. That was the key turn level, and the low was 30. So it probed just through this and then ripped, what, $25, something like that, off of there. You can see the low right here this day. This is saying you want to be a buyer here. Nice move up. I mean, to me, you're looking at where do you want to, what's the bias that you want to have. And that was really the whole point of key turns, that you could look at a chart, there'd be a line. The other ones we added in, and, we had these other levels that we added to give more opportunity, but it's really, there's that key level that we're looking at. And that's what we want to make sure that we're trading around. We look at that and then we can treat the other ones basically the same way. But just wanted to have you understand the basic fundamentals of it. Okay, so let's pivot and let's go look at something. We looked at backfill a little bit in the last training. This is gold on backfill on gold. Now, here's the thing with backfill is it's going to change based on the chart that you have it on. Now, it doesn't mean that some of them won't be the same, but a 5-minute chart and a 60-minute chart are going to have different prices, most likely. And really all backfill is trying to do is tell you where there are areas where it's likely the market's going to come back to those areas. And the original idea behind backfill was that there are institutional orders that were not filled at those areas and the market needs to come back to that area. So you can see here, I have a year of data loaded on a 5-minute chart. There's 1,288 levels. In 20 days, there's a 97% fill rate. So 99% overall. Within 2 days, there's an 84% fill rate on this chart. And I don't particularly like backfill on gold. It's not bad, but it's just probably not my absolute favorite. So I talked about this, but I don't know if everyone really understood. Let me just give this as an example. I'm not sure if everyone followed this last time. So here's this right here. So here's this level right here at this backfill level. The market comes back into this level and then a little bit of a pause and then breaks and starts to move lower. I'm going to just put a line right across there to continue that. Look where it came back up and tested before it dropped. And what I would typically look at is I would just do something like this and then look at how it came right back up into this level before it dropped. And that's something that I look at a lot with backfill, because while it's one exact price here on your chart, that's the only way we could figure out how to get it to plot and to do that. But it's really this area that you want to be looking at. And so it does come back to that area, breaks below it, comes back and tests it. Just look at it this way. If there was demand here and now the demand is gone and the market moves lower, when it comes back up to it, it's very possible there's now supply. So you've heard the old saying of that, support becomes resistance. It's more accurate to say that demand becomes supply. And then a really nice move down. This is just today on a 5-minute chart. I can go back and show you a number of different things. If you look right here, I like the one, so the further away the market trades before it comes back, the bigger the reaction that you're likely to get. So here's a good example of one of these. So also the moves coming back here. So you have this one, nice move, really strong. So let's just go look at that. Really strong move down that creates this backfill price, and I'll just put a line right on there to carry it. I'll put it right here to carry it across. And okay. And then strong move back up through it. So strong move down, strong move up. I really like this backfill price. If they come back here and notice what happens, they come back into this backfill price at 67.1. So this breaks by a point right there, and then off to the races here. Also here, once it broke right here on this one, it came right back. So that's how, I mean, even though there might not be a lot of backfill prices, if you go and you look right here and you see this, okay, look, it breaks up above it. So here's your backfill price, this red one. Market breaks up above it. No selling or anything here, but when it breaks above and comes right back, it's 81.3. It came 2 ticks through this backfill price, and then from there moved up about about 6 points. So I want to find one really good example. There we go. And I mean a good example of, look how long it took for price to come back to here. You see that? So, and then look at the reaction back through there. So, okay, this is quite a while. And when it came up here, look at the selling that happens off of this area. Now, I have no idea how this is going to turn out, so let's go look at it. But I'm going to mark these 3. These 2 are the ones that are most interesting to me. I'm not even sure if what price has done since it's, yeah. So what do you see here again? Did you follow that? I just marked these 3 backfill prices to keep them going, and notice what happened. Today came right up into here and then sold off from there again. And came down here, came back up here, literally hit there to the tick, probed a little bit through it, I think a tick, 2 ticks through it, and then dropped again. So backfill's very, very good at spotting and picking out these areas of importance in the market, and likely they're going to be important for, a while to come. Here's another, you can see, so when you have a price like this and it's been this long, so this one's crazy. Let's see if we can find how far back this one goes. This is a really good example. So look how long this price is on here. So this was from May 14th and just kind of blew right through that. And then look what happens over here when it came back and filled this backfill price right here. So the further away price goes before it comes back to backfill, and it's like the further it goes in the distance and the longer the time goes, within reason probably, but the longer the time, the more reaction we'd expect when we come back into that level, or the more critical we'd expect it to be. So I'll just put this on here so we can see where it continues there. So that's
there's a request to pull up backfill on NQ as well.
Yeah, good. I have an NQ backfill chart right here, so we'll go look at that in a minute. So look right here, 1831.8, and the low is 31.7. Notice came right down, hit backfill. That was the 14th. So this has been, that's right on the verge of like 20 trading days, maybe 21 or 22 trading days. 97% of these fill inside of that time. So if the market came down here and hit right there, and you saw this was a backfill price, you're probably thinking, I bet it's going to come down and hit right there. So it does, and then really big reaction out of here. So it bounces 10 points out of this area. And then notice what happens when it breaks right here. Here's your break, and where does it come back and test? Well, conveniently, there's another backfill price right here, but it comes right back to this backfill price to the tick. So it's really simple. Backfill is essentially spotting these areas for you where you're likely to have supply or demand. In this case, we're looking at there's demand when it comes back down here. And there is demand there. We can see that. It probes it by 1 tick and bounces 10 points. Now, when it comes back through here, the demand is gone, and as often is the case, that demand becomes supply, and we see right here they come back and test it, and then an absolute huge rip. You could pay for backfill on one of these types of trades. We come back up, we fill. So as this is all dropping, we know we need to come back up and fill these prices. So as this is all dropping, we know we need to come back up and fill these prices. So one last thing I want to look at, and we maybe already looked at this, but look at how long these have been on here. I don't even know if we've ever been back up that high. Don't think we have. Great, so that's something I'd be keeping an eye on if the market comes back up there. The point is the further it goes in space and the farther the distance, look at this. This one came, that's 1804.2, and the low there is 1804.4. So 2 ticks away from hitting this backfill price. So do you think that's at all telling you there's demand in that area? I mean, 2 ticks away from there, and then a big move up there, and then it did come back and hit it. And then again, look what happens. They break this one, they come back up to this area. Also, you got a really nice confirmation of some supply right here. And then you have this long-term backfill level that's been on here. And then comes up, tests, and then drops. And by the way, you can put this on a 60-minute chart. You can put it on a 15-minute chart. You can use it on a tick chart. I just happened to pull it up on here. Well, we want to go look at NQ. Anything particular we want to see on here? This is a 60-minute chart, which I just pulled up here, just something I was looking at. So I pulled up a 60-minute chart to just kind of highlight some of these areas. What you can see today, if you want to look at NQ from today, this first reaction, we had this backfill price right here. So that probed about 8 points below there, and then really nice move up. And then can everyone see what I'm drawing right here? You see this backfill price. And if I just extend that out right there, look at where the rest of the day traded. And then where did we come down to? Right here. This other backfill price right there.
Ephraim, does the price show up when the bar is forming, or is it after the bar closes?
It shows up as soon as the level is established.
Got it.
And this is just a 60-minute chart. You can use this on a lot of different charts. I'm really trying to show you just some of the things, some of the secrets. This was not really how backfill was designed to be used, but just things that you kind of figure out along the way as you trade it. So notice this backfill price right here, and notice where the market comes back right here, holds that backfill price, and then moves up. And I bet if we were to look at this one over here, right there, I mean, this basically holds anyway within a few points. But I bet on a lower time frame, it would look a bit cleaner. There's probably a direct move right off of that. So let me kind of bring this down a bit. Look at this big move down that happened, and look at where it stopped. So here's your backfill price. It probes through that, comes right back up. By the way, where did it come back up?
There's a question about, is the algorithm for backfill or key turns tied to prediction points? And just to be clear on that, that's the answer to that is no.
Yeah.
And that's why combining prediction points with the backfill and key turns becomes so much more powerful.
Yeah, absolutely. I mean, I think I've, under no uncertain terms, talked about how powerful I think prediction points are. But I think combining these with prediction points starts to, and I have a chart, I have a couple of charts with the Pro Suite, with a bunch of the different Pro Suite tools on it. So what happens? Big move up, big move down, comes back up to backfill, that holds, big drop. This works, and if you, I mean, really look at some of these areas. If the market came back into here, great, it's fantastic, lots and lots of good levels down here. Again, long term, let me just show you this. This is obviously a long-term level. We saw that coming across here for some time. So 18.5. So this is just an extension of this long-term right here. And look at where literally the low of this this is a 1 hour chart. So look at this 1 hour candle came down here, basically hits right on here, 2 ticks away from that on the NQ, and then ripped off of there. There's just so many different uses for these. I mean, look, I mean, if you just went through and just extended out which I think is actually just a setting you can control. Look at this. These are just backfill levels. I'm just marking off the backfill levels. That's it. See right here where this, if you can't see there's something to this, it's not for you. I mean, if we're going through and we're looking at this, here's a backfill level, the market comes back up through it, and this price comes right back down and tests it within a tick or two. The next candle tested this other backfill level within 2 ticks. And then we have this one up here, or what, I mean, and it just, and then a huge rip up there. To me, these are, when you look at, I think backfill is one of the most underutilized things that we have. And I think it has so many different applications when you start to look at different things that it can do here. But for me, if I'm buying, I want to be looking at, I mean, I can buy here, I can buy here, I can buy here. And where's my target? I mean, I don't have any backfill prices anywhere up here. So now I got to figure out what my target is. How high is this thing going to go? And this is just today. This came down to 14,247 and went up to 315. 65 points-ish, 70 points, something like that. Then from 34 came back up here, so 234 to 293, 60 points. Just these two today on a 60-minute chart. I think you get the idea, but we'll just really quick, I'll just show you like on a, so this is a 15-minute, and sometimes you get some of the same levels or close to the same levels. These vary just a little bit. You can see that varying just a little bit here. There you have it. The longer the bigger time frame chart and the longer the price has been established, the more likely it is to be. Very important. Okay, I want to show you something on one price, and I really debated teaching this. I've never taught this in public. I've probably taught this 2 or 3 times total. And so I'm going to show you something here on one price and what I like to do with it. So we have gold, and I literally just pulled up gold and started because I use the S&P so much. And I thought, I really don't know anything about gold, and I thought it would be a great learning opportunity for me and an opportunity. I have so much bias on the S&P because I have traded it for so long, and I basically know what all of these different tools would do even without them on the chart. I wanted to do something different from what I basically am always doing on the S&P. So let me just show you, I have something really simple here. I have so one price, let me first set up what one price actually is. One price is basically, you want to think about it like a magnet that price is likely to come back to. So you can see that it plots at 5 a.m. Pacific time. That's 8 a.m. Eastern Standard Time. So an hour and a half before the market opens. And what the analytics track here is out of a year of data, because that's what I have loaded, 75% of the time it gets hit on day one. And you can see how those numbers go down. Over 20 days, it's 94%. But if there was a price that 75% of the time was going to get hit, you'd probably want to know about it, right? That's what I would think. And if there was within 2 days or 3 days, there was an 86% or 4 days, almost a 90% chance of this getting hit, I'd want to know about that. I'd want to know what that price was. So I'd want to, because that price is going to likely act as a magnet that the market's going to want to come back into that level. Let me show you. I mean, one really simple thing is if you're above or below, you can see right here, this is a good example of, you have to have trade management skills, but you can see here, it populates right here, and it didn't hit after it populated until way over here. So there's a lot, that was around 1900. It dropped about 45 points. It's not a bad thing. It's just telling you that right here, 86% of the time, this is going to get filled by this day. 83% of the time by this day. So for me, if I see this thing happening like this, and I see the market moving up towards here, and I see this over here, I'm thinking 83% chance it's going here. Next day, 86% chance. I probably don't want to trade against those kinds of odds. By the way, 75% chance we're going here, 86% chance we're going here. I'm trading it for here. And 86% because this is day 3. That's all. This is day 1. So let me show you something. So now here we go. Let's get into the good stuff here. I'm going to take this day. All I have is I just have my Fibonacci extension set to, like, it goes 100, 200, 300, 400, and then negative 100, negative 200, 300, 400. That's it. And all I'm going to do is measure the difference between these using my fib extension with those settings. So from one day to the next day, I'm just measuring the distance between these, okay? And that's giving me a target for this move, that's giving me a target. Taking these two levels, if these are, just think about it like this. It's really just a measured move between two key levels. That's all it is. If this is important on this day and this is important on, let's say this is the current trading day, like this, and this was important the day before, then I'm just measuring the move between these. That would give me my first target up to there. And by the way, I can draw that right. Let's actually just let's redraw this so you get the sense of, so I can draw it right there. So here's your first move up. First target is achieved. And then your second target is basically the high of the day. It might be a tick off, but that might have been because I didn't draw it right. So how's that? So you take these two levels. We can do this all day, by the way. It doesn't work every day, and I'm going to show you how to treat it differently on different days. But you take this to there and extend that, and that gives you your targets. So first target, second target, it could keep going. Did we lose anybody? Do I need to pause and answer questions? I'm going to show you some more examples of this.
Ephraim, is there anything about the level being filled or not the prior day, or you?
No, not that I know of. How's that for an answer?
Yeah.
Not that I know of, okay? Could be, but I don't know. Not that I have discovered. Again, one price was not meant to be used this way. It was really something that I came up with after.
Yeah.
You can see you measure from here to here. This gives you your first target. If these are too large, you can cut them in half, and you can keep cutting them in half until you have numbers that are useful. So here's what happens. When the space between one price starts to get too large, it gives you, I mean, you obviously know we're going to get really big moves, but these really big moves give way to small consolidation moves, and small consolidation moves gives way to these big trending volatile moves. So look at this day and this day. See how little of a change there is in one price? But look at the huge range. So when it's like that and we didn't hit either of these for this day, I'm probably keeping, this is basically pointless to draw from here to here. It's like these are 3 ticks apart. I wouldn't draw that. So these consolidating days like this where they're really close, I start going, where are my big targets that we haven't hit yet? And that would have me starting to look out here. And if I go back, I can I'll probably see some other days where we had, bigger targets for that day, and they didn't get the target.
Well, that's where you could pull in backfill for your targets as well, right? So if you have backfill prices that are targets that are a couple days old, that's where you pull those in.
Absolutely. And you can see how this, you can kind of start to piece some things together. So here and here, so these consolidate, so these are, sometimes they'll hit the same day. That'll happen often. But in these really tight, when the market's not going anywhere, then I start going, okay, where are these, where are the big moves that I'm looking for? And I start going back to some of these targets that just never got filled. So here you go. This was drawn for this day, and we just looked at that high of the day right there. I think to the tick, maybe within 1 tick. Anyway, let's move to here, and you're going to see this another good example of, obviously none of those hit this day. So we go into this kind of tight consolidating range, and then I'm going to go. So I leave these on when they haven't hit. Like when it hasn't filled, I leave these on. And so I can tell, I can go back here and go, okay, there, this is for this day. And I can just, for me, I can look at a lot of different levels on there and see. I'll go back and erase these just so that we clean it up a bit. But
Are
you
there
can
any
see,
questions, anyone? I know this is a little bit more advanced stuff with our tools, but I want to make sure if you have questions or this isn't clear that you're jumping in.
yeah, so look here. Here's one price for the day. Here's your first target. And you have this as soon as one price populates, you can get these targets. There you go. And then it reverses and comes all the way back up here. And look at where the Globex session is. The high is to the tick right there. Is it always going to be to the tick? No. Is it always going to work? No. Guess what? You don't need it to always work. You just need it to work like, you know, once in a while. I mean, if you can manage your trades, look at the move down here in Globex. This fills. Think about them as targets. So you're measuring from here to here. It's just one day's one price to the next day's. Here's your, I mean, basically you want to think about this is really your first target would be the previous day's one price. Next target, right? And then probes through here a bit, no problem. Let's look at one other thing on here. This is where it starts to get interesting because basically anyone who trades knows this is not going to fill unless you start getting an enormous amount of volatility. So what does that tell me? So look how far apart these are. It's clear here and clear up here. So that tells me that we're moving into, when we start to get that far away, I'm going, it's just not going to happen. It's unrealistic that that the market's going to move that much. So the fact that these are so far apart, what happens? There's this big move, an increase in volatility, and then the market has to rest. And that looks like consolidation on the chart. So then I start going, okay, consolidation. We're coming into a consolidation phase here on the chart. And you can really do this. So you start getting these consolidating days. And great, now the market starts to move again. And notice, this is the point I was trying to make on this earlier. So you see here to here, well, to here, to here. You see how basically, in a sense, one price is telling you, okay, we're in this tight consolidation range, but tight consolidation leads to big explosive moves. And then big explosive moves like this, these types of moves right here, just ignore what's happening with the candles. This to here, look how far apart that is. It's telling you the market is coming into a resting phase. There's no way it's going to move like this after a move like that. I mean, not no way, but like short of going to war or some kind of crazy news or something, this thing needs to take a breather. So, okay, we're going to take a breather, but we have this crazy target. If it's going to keep moving lower, we have this crazy, we have these targets way down lower here. And then look what happens. Okay, consolidating, 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 and consolidating gives way to big volatility. So it rests, it takes a breather, and then, okay, volatility comes back. And then we can use these targets from previous days. So let me just go erase this. And then this gives you a pretty good target for here, using this day. And then look at where the low of that ends up being. So we just took that one price to that one price, and that gave you that target, which was filled that day and then bounced back from there. So that's a way to use one price that I don't think a lot of traders are doing, but I think it's extremely, can be a really useful way to use one price. Wait, I don't think I drew that the right way, did I? Yeah, here. So notice what starts to happen. You start getting these. And look, just to give you an idea of like how long something like this can be relevant, just using here to here, look at all the places the market reacts. Here, comes back up here. Now, technically, the new day would start over here, but look it's still relevant. It's still working. Look at the high of the day today. That's using a couple days ago, using that. Do we have this? So then drawing from here to here, look at this is the low of the day basically yesterday, and then the high of the day today. And if we draw from here to there, you can see, so then another thing that you can do is you can draw from here to here. I just have, I don't want too many lines. So if I'm gonna have something like this, we're breaking out of, what this is telling me is we're breaking out of this day's range. By the way, notice where that is. I mean, right there. As soon as that happens, you have these levels. It comes up, hits from that level, comes up to that level, comes down into here. We break out of this range. Where are we going? Well, really into the previous day's range, which is here and here. And then it retraces back down out of that. Anyway, there's a lot of different things we could look at, how backfill relates to that, or how we could use key turns, but I just wanted to give you some ideas. But using the difference between these one price and using those to forecast movement and targets, I think it's phenomenal. David, do we have any questions?
No.
Okay.
No other questions.
I'm not going to spend a lot of time on this. This is not proprietary. The one thing that we do have in here that you're not going to, I mean, unless you go build it somewhere, we have analytics. So this is trade balance. It's really just telling you the first 30 minutes and the first hour of the trading, of the regular trading hours. It's just giving you the high and the low of that. And then what you see here is that only 5% of the time does the market trade in balance. So 95% of the time, the market is going to trade outside of this trade balance. And you can see the statistics, you know, trading 30 minutes. So the first 30 minutes, 21% of the time, that's the high of the day. And 29% of the time, that's the low of the day. And then 60 minutes, that's 31% of the time is the high of the day, and 39% of the time is the low of the day. So basically what that's telling, and you can, it's in the settings, you can change the, from count, from percent to count, okay? So if we're looking at this, we have 258 days, 53 times the 30-minute, the first 30 minutes was as high as the market got. 80 times out of 258, the first 60 minutes was as high as the market got. So that means that the rest of the days outside of that the 12 days that it didn't, so we could do the math on here, which I did last time, but basically it tells you that the majority of the, I mean, you can do simple math here. The majority of the time, and these are, I believe, included in here. I'd have to look and see, but basically the majority of the time, the market over the past year of data that we have loaded on here, and it might be more relevant to look at 10 days or 15 days or 20 days, but over the last year, the first 60 minutes was the high, only 80 trading days out of that year. But we had the low 101 trading days. And then, you know, and it trades outside of that extension. Almost always, you know, 12 days, it stayed inside of this tiny little range. So nothing super fancy with trade balance. We just built analytics into it. And really, you would probably not want to look at the last year. You'd want to look at something more relevant. One other thing, I'll just show you, this is one price on the Nasdaq. And I just am going to literally show you the same thing of, so big target, right? Gives you a big move. And then I'm just showing you the same thing I was just showing you on gold, but then look at the, so target comes up, breaks, comes right back to it. Convenient that it's also a backfill price right here. So that worked out nice. And then look at this huge range. So when you get these really big ranges here, what does it tell you? It tells you the market is going to have to start, you know, market has to take a breather at some point. Okay, so just huge range. And then notice what happens today. Doesn't really go anywhere. Notice how one price was like a magnet. So on these days where we have the targets would just be way too far for the market to travel under normal circumstances, one price acts like a magnet. It just keeps coming back to it, not getting away from it. when we have targets that are achievable, market tends to travel away from one price to the target, and then oftentimes is kind of drawn back to one price as well. While we're on all of that, let's look over here at, this is the Nasdaq. There we go. Okay, so here's the Nasdaq. And David brought up a good point of just looking at different things here. So notice this is this is the kind of stuff I love seeing right here. So you see this 90 half, and then look at where one price is today. So backfill's at 14,290 half right here. And then look at where one price is, 14,290 half, same tick. And if you understood the way these two things work, they couldn't be any more unrelated in the way that they're going about getting that data. It's unbelievable. So if you don't think that there's institutional money watching these areas, so to me, that would just make that area jump off the chart for me. Okay, so I'd be watching that. And then we have key turns on here. So key turns is saying want to be a buyer above here and a seller below here, and then a buyer up above it. And then we also know we have this, we already talked about, we have this level right here, this backfill level. So something we're watching. And then at the same time, see this backfill level, some nice confluence between backfill and key turns, and then really nice move up. So just to give you an idea of what it looks like today, on a day like today, if you have these kind of loaded together. And some days you might not find it really useful, but in a day like this, I mean, we still traded outside of the trade balance, but the majority of the trading was inside of here. And then this is the Russell 2000, and I just wanted to give you a look at what it looks like. We do a lot of stuff on the S&P. I wanted to show you something other than the S&P. So what do you see here? We have, again, look at this. So we have, here's this backfill price, and then look where one price turns out to be today. Same level as backfill. So again, if you think they're not paying attention to this area, they are. There's definitely institutional money that, I mean, you don't get these two different prices here without some kind of institutional interest there. So that's really what I want to know. I want to identify where those institutional areas are and then be able to trade around those. So I'm going back and I'm looking on here, and this is just a 5-minute. If I was looking for other backfill prices, let me just give you one other look on this on the Russell, and there's one other thing I want to look at. All right, so this is just a 60-minute chart. It shouldn't really change much other than backfill and how backfill looks. Here's backfill, this level on backfill. Here's these two different backfill levels. Key turns isn't going to change. Not a lot's going to change there. Here's one price. And then, but you can start to see some of these. So see these areas here on backfill. So really big move up, nice move down over here yesterday. Explode up off of that right here. Another good example. So these are just different ways that I go about finding levels. I really want to find where is institutional money likely that they're going to trade. So here's a backfill level, trades up above it, and it comes back, I think, within a tick of this backfill price, and then takes off from there. And then where are we going? Well, I mean, we have an unfilled back price up here, so I would think we're going to go back up here and fill this level. And then there's a lot going on up in here. So, looking for it to come back up into here. Where does it pull back to? Just below backfill, and then moves back up again. And where does it, and where does this kind of die out for the day? Right here around key turns. So that gives you an idea on that. Okay, somebody asked about the box. So that's where we're going next. I'm going to show you. This is a range chart on the box. So the box is like as easy as it gets. And just a thing that I would tell you about the box. So in our Discord channel, in the server, we have a dedicated box channel, and we have a trader now who's running that, and basically a group of traders working together, trying to help each other find the best settings, the best stuff related to what they're looking for on their box, with the way they're trading the box, their own style of trading. And it's really simple. This is customizable. You can turn off the coloring, you can change the color, you can do whatever you want to do with it. It's really pretty simple. A box appears on the screen like this, and it says buy when the candle closes above the box, and it says sell when the candle closes below the box. That's it. These are targets that you can look for these targets for the market to move down to here. And these would be different target levels for the move down. But that's basically, so this is just a 10 range chart on the box. And here's, starting out today, you can buy up here, you could buy the pullback down here, anywhere in this box. Once I get the buy signal, I'm interested in buying it. Off the middle of the box, it went from 1781, about 14 points. And then from here, we got the sell signal, and that was really nice to end the day, and then just kind of some consolidation. And then I'd kind of ignore this after the market closes or towards the end of the day here. I wouldn't do a whole lot with that. But one other thing, I'm just going to jump over here and look at, this is on the box, this is on the S&P, it's a 5 range chart. That's not some secret magic number, but I want to show you on a day where the market was fairly consolidating. So that's really what I'm looking for. I want to see that. What I really want to see is I would like to have a 1-to-1 risk to reward minimum. So if I can get in here at the top of the box, I really want to get up to there for my target. That would be my second target up there if I can get that. So let me talk to you a little bit about, there's so much training that we've done on the box. I think someone said we have 25 videos on our YouTube playlist for the box. So there's a lot of training that we've done. This is on a day that was very, very lackluster, I think. Certainly nothing just thrilling happening here in the market today. And look how well these signals, almost all of them go up here to this green line. So I mean, very few, there's a little bit of choppiness here towards the end here. That's just an example because I show the 1,000 tick chart so often. I just wanted to give you a different look at some of the, there's other things that you can, other settings for the box. So being in the Discord channel and being able to talk about those. But this was, I think, this was a great trade here off of this morning's 1,000 tick chart. So we got a buy signal. It came all the way back down here, didn't close, so it doesn't give us a sell signal, and then moved all the way back up here. So off of that low at 37, let's just call it 37.50, a tick in front of the box, moved up to 46.25, so about 9 points, and then ended up coming down and giving you a sell signal. And then from that sell signal off of the red line dropped from 39 to 32. So 7 points over here. And then came back up again, kind of chopped around in here, and then a nice drop to finish out the day. This can be used on so many different kinds of markets. I mean, we have traders who have never really traded or known a lot about trading, or certainly never been consistently profitable, and they're finding success with the box. So I think it's one of the best tools. And if you can start to bring some of these things together, and you can see how some of them would really, really start piecing together, and you can build a strategy that's fairly robust. Sure, let's look at the box. So somebody asked for a box on the YM. Well, I'll tell you right now, 1,000 tick chart is not going to cut it. This is 100 tick. I have no idea if that's going to be halfway decent. I don't really trade the box on YM. David, you've probably spent a little more time with that than I have. Do you have any input on that?
I haven't done anything on YM. I do 100 tick chart on RTY. I haven't looked at YM though.
Yeah, I haven't spent.
I'm not sure what the volume is.
So this is literally the process of what I would go through. This is a 300 YM tick chart, and that's literally the beginning of the process that I would go through if I was trying to find something that I liked. I'd start just looking through charts. Oh, and I should add to this one thing that I didn't say. So the box also has a version called the auto box, which is not meant to be a black box strategy, but it will enter the trades for you and it will exit the trades for you as well. But it's really meant to take away the discretion of, am I going to get in this trade or not? And just puts the trade on for you. It would still be strongly recommended that you're watching it as it's doing what it's doing, but it takes out that mechanical part of it. And also it can definitely eliminate the guesswork of like, should I take this trade or not take this trade? Were you going to add something?
It gets you, it gets you in when the market's moving too, because sometimes a box is going to appear, you get the signal, and there'll be one candle that will give you a chance to get in at the top of the box if that's what you're trying to do, and the auto box is much quicker than you can be clicking the mouse if you're not watching your screen like a hawk. And then once you're in the trade, then you can jump in and manage it.
Yep, that's how I see it. And also, if you're trading multiple markets, it can make a difference in. You might not be able to pay attention to all the different ones, so you can just get alerted once you're in a trade, and then you can jump over and manage it. Something like this, I think this looks pretty decent. I'd have to go back and look. I mean, but this is a 300 tick chart on the YM. I think that looks pretty good. I like it. You're not going to have 100% winners, but just judging by what I'm looking at right here, I think it looks pretty good. Maybe a 2 something. I'd kind of mess around with different. And then I'm going to ignore a lot of this stuff in the overnight because I'm not going to trade that anyway. So that's not what I'm looking for. The box is designed, let me just clarify this. The box is designed to get these moves. This is what it's built for. It's built to capture from here and get this move. It's meant to trade volatility. And you can see that it does that, pretty well. I mean, it's long through this whole move up here. So when I'm looking for something, I'm looking for something that's going to give me, that I'm not going to get a lot of signals on that are going to turn into losers. I want something that's going to fit my personality as a trader. So I don't want something that's going to give me 150 trades a day. That's not going to work for me. I want something that's it's why I really like the 1000 tick chart on the S&P. Okay, so very last thing I'm going to talk about here with the box, and it's something that's a bit advanced, but we have a number of traders who are having some success with it, and there's a couple of different ways you can do it. So I'm going to just talk about from a trade management or risk management side of things, of that. One of the things you can do is you could just, whatever size you're trading, decide how much the risk is. Basically, if I'm getting short, the risk is here, and just, figuring out how much can I risk and then putting your size on from there. The other way of doing it is you can size way down, and you could give yourself room, and you could set, a number of times that you're willing to do it, or however many. I mean, basically you could say, well, I'm willing to try this one 3 or 4 different times, or whatever it might be. But basically what you would do is, let's say, where would I find something like this? Got to go find a losing trade. Okay, so right here. So it gives you a signal to get short, and then you'd basically end up getting stopped out and reversing into a long. So what you could do is, if you're trading on a 1-to-1 risk to reward, basically look like this. So you would get in here at the top of the box. You just lost because you got stopped out if you got in short right here at the bottom. So you got stopped out up here when it closed right there, but you also could now get in long. And then you just needed to come up to here. And if you just did that with, let's just say, 1 contract, you would break even, and that box would be a wash for you. Here's another idea of what you could do. Instead of, like on a reversal trade like this, instead of taking your profit here, you could take your profit at the second one. And again, this is just 1 times the size. I just extended the box up to here and up to here. So you could take your profit up here, which now you recover from your loss and you pay yourself. And I would argue this trade shouldn't even be a loss anyway, but that's neither here nor there. So, I mean, if you're managing this trade and you get a short signal and it comes up here and comes back down, I don't know why you're holding on to this trade. This is built to capture momentum. This is not momentum. You got a signal and it went the other way. So when it comes back and lets you out of the trade for free, take the free pass and move on. Here's another thing that you could do. Talked about this in past trainings at different ways, but it's for professionals. you could double your size. If you had a trade here that was a loss, you could double your size over here on this buy. And I know that David's been having quite a bit of success on taking, let's just say you were trading 1, and when you got stopped out, you bought 2 over here. So now you'd make back whatever you lost when you hit here, and so you cover 1 there, and then you'd cover your second one, you cover up here. So now you made from here to there on your first one, and that covered your loss on this sell. And then you have your other one that was basically free, and you route it up to there. So you make your winners really pay. And that would be up to each trader of how aggressive you would be about doing that, and how many times you'd be willing to basically double up on a reversal, or how much you could handle to draw down in a day or in a trade or whatever it is. That's really up to you. I'm just kind of telling you an idea of how you could consider handling things. That, I think, pretty much covers it. Is there anything, David, that I didn't cover, or any questions that we want to go over?
No, I don't think so. I think we've covered pretty much everything. You know, if people want to get the Pro Suite, we still have that offer. So I don't know if you want to bring that up.
I have that somewhere. Let's see. So, you know, the real point of today, you know, what I really wanted to accomplish here with today is that we, you know, I'm not trying to design a strategy out of the box for you. I mean, we have things, I mean, you can use the box for that, but I wanted to give you a number of different ideas. And I know a number of you on here already have the Pro Suite. And so I wanted to give you some ideas of how you might be using them, ways that I'm using it, that kind of thing. So hopefully that was helpful in that. So you don't have the Pro Suite and you want to go get it. So here's what we're offering. You get a lifetime license for Backfill, the box, auto box, one price, trade balance, key turns, and you get the prediction point bias. And those prices that you see on there, that $24.97, there's literally people on the webinar right now who paid that price. That's the lifetime subscription. You get lifetime access to those tools. It's $24.97. And I know we have people, I can see the list of names of people who are here, and we have people who've paid $24.97 who are on the webinar right now. Those aren't like made up numbers that we said, you know, maybe one day somebody might pay that. There's actually people who pay that all the time for these. So what we said is we want to put all of our tools together and give them to you at the best price possible. If you want to go buy them individually, that's fine with me. It's $17,479. You'll own them all for life, and you're welcome to do that. The individual links are all on the website, and if you feel really generous, you're more than welcome to go sign up for them all individually. If you don't want to do that, here's the offer for you. We're going to give you a year of prediction points for free when you sign up for the Pro Suite before the end of the month. That's $3,564, and we have tons of people who pay that for prediction points. It's over $21,000 if you go sign up for it all individually. And again, you're welcome to do that. I'm not going to mind it. David isn't going to mind it. You know, we'll all be fine with it. If you don't want to do that, you can just go get the whole Pro Suite, and it's $59.97. You're getting a year of prediction points. You can have access to the Discord server. We have the dedicated box channel. We have people talking about prediction points. We have traders trading the S&P, Nasdaq, gold, crude, the Russell, the YM. It's very active. A lot of traders using the same kinds of tools that you're using. We didn't talk about the bias indicator. It only works with prediction points. And it basically just gives you an arrow to buy or sell if there's a signal around a prediction point. And so it's something you can go check out on the website. It's actually a really great tool if you understand how to use it. I just only have so much time here today, so I wanted to cover some of the, I've done a lot of training around prediction points, so I wanted to cover some of the other things. You can go sign up. It's daytradelikeapro.com/Pro Suite. You can get it. It's $59.97 for the whole Pro Suite. If you don't like that and you'd rather pay $21,000, you can just go to the homepage and buy each of the things individually. But if you don't want to do that, just go do the Pro Suite. And if you have questions or anything for us, anything that we didn't cover that you'd like us to cover, just let us know. With that, I really have nothing else to say other than thank you for being here. I know that your time is valuable. I know you have other things you could be doing. I really hope that you got something of value for yourself today. Again, thanks for being here. Day Trade Like a Pro really exists to make a difference for the traders that are here on the webinar with us, that are part of the community. You really are the best part of Day Trade Like a Pro. So thank you for that. And if there's nothing else, David, anything you want to say to send us home?
No, thanks for everyone being here. Thanks for being so generous with your time and your knowledge, Ephraim, and look forward to seeing everyone in the Discord rooms.
All right. Thanks, everybody.
Thank you. Bye-bye.